All right. Hey, everybody. Welcome to another episode of Ask Me Anything. We'll go ahead and go around the horn here in just a moment, do some introductions, but go ahead and get those questions into the comment box, and we'll see you guys in 14 seconds. All right. Hey, everybody. Welcome back. All right. Go ahead and get those questions in the comment box. So
where'd we go?
What's that?
Where'd we go? You said welcome back. Where'd we go? Just kidding. Hello, everybody. Welcome to another Ask Me Anything. I'm the head of the host here with Brian and Tess. But Brian, back to you, buddy. I just want to have some fun with you.
Now we got to do some stuff. Can you hear me?
Yeah, I can hear you.
Yes, you can hear me, right?
Mm-hmm.
Like we'd all hear each other because Joe's not here.
Oh, there you go. No, Joe.
Yeah. Small crew today. We got a lot of people traveling and doing some things, getting ready for some live events. So you got the A team here today. But yeah, so ask me anything. So once again, get those questions in the comment box. This is for you guys to ask questions about, obviously, infinite banking, any other topics around money, investing, whatever you want, the economy, go for that. But go ahead and get those in there. And by the way, we do Ask Me Anything every Wednesday in addition to our other events. So if this is your first time, welcome. This is recorded and it does get posted into our Chris Noggle YouTube channel, typically on the weekends. So you guys go back and watch recordings. But for everybody, I'm Brian Fouts up here in North Idaho, and it is pouring down rain right now, which we need it, but I don't like it. But rain right now. Yeah, we need it up here. It was really dry winter. We only had a couple feet of snow. Typically, we get about 5 to 6 feet. So definitely lack of moisture. But with that, I'll go over to Ms. Tess.
Hey, I'm Tess Hulek, and I am in Michigan, and we had rain. It's nice today. We had rain for probably a week, 10 days straight. Every single day I was walking in the rain. But hey, you do what you got to do. I want to say something. We're a big family here. For those of you that don't know, I see in our chat, we have a Carrie Swanson. She belongs to Jason, but I share her because she's a Michigan girl. And I want to congratulate her because she officially has her first policy. She's approved. Tell me she's approved. So we're all excited. We are one big happy family. We will cheer for you, every single one of us. Now I will drop it down to Jason.
Yeah, thank you, Tess. Thank you, Brian. Congratulations to Carrie. It's exciting, right? Anytime you have someone else that breaks free. Wow, my language is not so good today. we break free from that system, that pattern that we've been told is supporting us, where we're really just supporting others, and we take back control of it. So it's exciting beginning of your journey, Miss Carrie, and I look forward to reviewing everything with you again and just showing you how much better it got since your approval. So
awesome. And the last introduction is going to be Stephen.
Oh, he's back. White hair.
Hello?
He ghosted us.
Who knows what he's doing? But yes, go ahead and get the questions in, and we will dive into the questions we got. So Carrie Swanson's asking, or stating here, Jason, does my segregated account need to be a checking, or can I use a savings account?
I was seeing if anybody else would answer. You guys usually answer. It can be. Checking is probably more ideal, but it can be either.
Well,
it can be either.
You have to just be able to have ACHs come in and out of that account. Some banks I've heard don't allow you to do that from a savings account. Some do. Just that's it. So I think what do I use? Actually, I'm trying to think about. I think mine's a checking account.
I started out with a checking account, and now it is my sweep account for our all-in-one. So. You know, it can change too, Carrie. You can change that with your implementation agent in the future. Just have it someplace where, you know, the money's there to start with that can be drawn out to go to the carrier. And that takes usually about 3 business days, sometimes a little longer, but usually about 3. And then you reverse the process by filling that same piece of paper out to go in the other direction.
Absolutely. Jason, what banks, if you don't mind me asking, is yours with?
For the first lien?
Yeah.
First Savings Bank.
Okay. Yeah, I'm working with CMG right now. Been a pretty good process so far.
It's exciting. It's another asset to have. People ask me all the time. Actually, Brian, I'm glad you brought that up and kind of asked me, because I had this conversation a couple times in the last 2 weeks where people are asking like, hey, velocity banking, hey, infinite banking. They're 2 different tools in your tool belt.
Yep.
And they're very different, right? How they work, the thinking's even different. The point is that you have more control with both. I mean, that's kind of where they're similar and they can work together very well. We started with infinite banking where I had policies for a couple of years. It might've been almost 3 years before we had our HELOC, all in one HELOC. And now we have 5 policies, right? And we're using them together. But we did one and then the other. You can go, some people start HELOC and then go to infinite banking and vice versa. They work together. So
Good explanation like that.
And I wasn't familiar with First Savings. I've heard of First Lien and then CMG.
It's FSB is the one that Joe used to always talk about. And now CMG is the newer one that we've been talking about, but they're both, I believe they're both partners with this whole group that we're in.
Yeah.
So.
And every bank, just like life insurance companies, have their pros and cons and different criterias and different underwriting and different products. So that's why I'm going with actually CMG versus First Savings, because they have a different way of approving people that have not, I'll be very blunt, pay taxes. That's me, by the way. So for about 7 years, I didn't pay federal income tax. Well, that means you can't qualify for bank financing, but solid income. So CMG can actually go do it a different way. So that's why. All right. SBB 526. Honest question with private lending. If you're not investing with a retirement account, so I'm assuming they're referring to like an IRA or something like that. How do you justify the risk reward with a 10 to 12% loan after paying 20 to 25% taxes on the earnings?
You're going to pay the taxes. I mean, are you talking about just your income or?
Yeah.
Taxes anyway.
Honest question. So, I mean, if you're not investing with a retirement account, so I believe SBB, what you're referring to, they're saying no, personal savings or business savings is what they're doing. Because with a retirement account like an IRA, you can just invest directly from the IRA to the project or whatever it is, or the opportunity, but it goes back into the IRA, including the proceeds, no taxes until you take it back out of the IRA. So to Tessa's point, you're going to pay taxes at some point in time, whether it's when you take the money out of it, the IRA, or if you take it as income right off the bat.
Even based on age, as people get closer to that, passing that 59 and a half, if your income is lower to keep you in a lower tax bracket, I would almost rather pay it then, because 20 to 25 isn't the top end of what taxes are, generally speaking, for many people. So you definitely want to take it in the best possible year for you financially to benefit.
Because you're paying the 10 or 25% on the 10 or 12%. But I mean, if you're private lending, just make sure you have a good CPA and they can walk you through different options for deductions. You can use things like the Augustus rule, which is the home conference room rental deduction, to get some of that money tax-free. There's lots of things to do, but just have a good person that's giving you advice or helping you with that.
And I'm not Brian's attorney, but I'm going to play one right now. He's not giving tax advice. He is not giving any attorney legal advice. He is just simply saying what he has seen other people do or what he's done himself. So
that's why I think you talk to your CPA.
Yeah, because we're not CPAs and we're not attorneys.
Yep, at least not yet. I don't plan on being one. But yeah, good question. So they also said they're looking to replace their W-2 with profits from private lending. So one of the things, the lessons learned that I had in life was when I left my W-2 job, I was going to go make money. I had some money that was going to support me. I wish I had waited until the other things were cash flowing enough to then cover all W-2 plus some. It would have made that transition a lot, not simpler, but less stressful.
Yeah.
Months. And then also I wish I had created more streams of income before I left the W-2, like have at least 2 to 3. For me personally, that would have been a lot less stressful because I only had one and that was very volatile. So yeah.
I totally agree with that too, because I never thought I'd leave the W-2 world. I thought I'd die with the W-2 in my hand. It wasn't until I met this organization, thought it was a scam, found out it wasn't, became a licensed agent. And I was so excited to jump that I did jump too soon, but I was excited to be a part, and I kept thinking, oh, I'm getting older. I can't wait a lot longer. It's got to be now.
Yeah.
FOMO. Exactly. I must have had FOMO.
Yeah. I think we all do. I think, Tess, that's cool you brought that up, because I think we all have that at some point in our journey, wherever you are. So if you're listening, there's always a moment where you're either comparing yourself against like your ideal, like who you believe you're becoming. And so that already puts you in a gap because you're thinking, I should be further along. I should be better. I should be, you know, or you're comparing yourself against someone who's had success, but you don't know how long they've been doing it, how much work they put in. And you're like, oh, I know I can be that successful. Right. And so yeah, we got to let that stuff go. I'm saying that out loud for myself personally in the moment, because I've been feeling a little bit of that today and thought that someone else probably need to hear that too. So
Yeah, absolutely.
Yep. Yeah. And yeah. Some people, other people are mentioning that they're with First Savings Bank as well. So declared ruler Brent, of course, you know, he's with them. All right.
I like that he likes cornhole. We'll have to play sometime.
There you go.
All right. Margaret is asking here, hey, everyone, live in Canada, Newfoundland. Can you send me a link to the life insurance website? Love and gratitude to you
cornhole?
all.
Sorry.
Uh-oh.
Yeah, now he's back. Exactly. Let's go, Snaggy. We'll play
We
again.
got games.
All right. Sorry, Pals. Go ahead.
Snaggy's pretty good at cornhole as well.
So as far as Canada goes, Stephen, you actually wanted to answer this one. So what?
Yeah. I mean, so we have a Canadian partner up north that does infinite banking. The laws are slightly different. The way the policies are set up are slightly different. So you're going to want to work directly with them. But if you send us an email, we can definitely connect you. Actually, let me get I do have here. Just email me. It'll be the easiest. It's snaggy at chrisnoggle.com. I'll put it over in the chat box.
Cool.
Every time you say snaggy, I think of Snaggy Snacks. Scooby
That's right.
Snacks. Snaggy
Num.
Oh, yes. All right. Christian is asking here, if I was given $1 million, could I put it all in a policy, or do I need to break it up into multiple policies? It's kind of funny. I've actually had someone that this was their scenario. It was their scenario, but
I have something that they could potentially do, right? Depending, like a different kind of approach. You could put it in, I forget what the funds are called, the mutual carriers that have like basically an account, a high yield account where the money could go in there and you could set up to pay the premiums every year for a number of years. It would be a challenge to get it all into a policy all at once, depending on how much your income is or net worth, to be able to carry that much death benefit on your body to put $1 million into a policy.
And what about, Brian, you can chime in on this. What about maybe even setting up annuities that would pay future premiums when you ran out of money? I mean, when you ran out of life, the life value to write your whole life policy.
Well, that's where I was going to go with this one as well. Thank you, Tess. Because, Christian, really it's about what do you want that money to accomplish for you? What are we trying to do with it today, tomorrow, next generation? And then look at what is the best vehicle and vehicles to allow that to happen. Because with that kind of money, when the insurance company looks at you, they're going to be looking at your age, your gross income, all these things, and your liquid net worth, which is that $1 million is going to add to that. So there's lots of ways to qualify for this. But the client that I had that big cash payday came in, they actually couldn't qualify to get that policy into it right away because the amount was just too large. And what we ended up setting up was a policy that had a lot of optional PUAs, they call them. This is how you overfund the cash value. And then they could do it over a span of time. So rather than committing to $1 million day one, they could say, hey, let's get into there over 5 years. But guess what? If you do it for the first 2 years and say, you know what, we don't need to put all of this in the next 3 years, we can keep some over here and do something else. It gave them flexibility. But as Tess was alluding to, there are products where you could put $1 million in, and it's going to provide either instant income today, guaranteed, by the way, cash flow, or it can provide you guaranteed income at a later point in time. And then you can use that guaranteed income to then put it into a policy. So it's doing more than one thing at the exact same time. And that's where I've had some really fun conversations where someone does an annuity, they get that guaranteed income. Now they don't have to worry about cash flow at all. Then they can do a policy, but they're using guaranteed cash flow to pay for the policy. And all of a sudden it's like this machine is working more efficiently because you have more things working together. But
yeah.
So
I actually think that's an exciting approach. I want to see people doing this.
Yes. Yeah. All right. Mavi the pilot says, my first policy became effective today.
Yay!
That is awesome right there. Congrats. Can I start using the vault now, or should I wait to talk to my implementation specialist? I just filled out the implementation questionnaire today. So, I mean, yeah, you can use a vault today. I mean, I would probably recommend taking a look at it. Get started with it. Yeah.
And your agent may have already put some information in the vault, so that might be a person to talk to too.
And again, it depends on what you're trying to do. You know, eventually the vault will be kind of integrated in everything we do. But for now, I would say you filled out the implementation questionnaire, have that meeting, see if you get your questions answered. If there's still more things, more scenarios you want to run, then that'll kind of tell you what direction to go in. So,
yeah, 100%. So Michael Jordan says, waiting for some opportunity to get some clarification. So I haven't seen if you put your question in yet, but go ahead and put your question in and we'll get into it.
Snaggy will say that you're better than LeBron. So thank you for being here.
He heard that. He smiled.
Yep. Yeah, I try to make him laugh sometimes, you know.
So Dan Sims is asking, can I ask a question about an annuity that has a 5% step up for each of the first 5 or 10 years? So yeah.
Hey, perfect people to ask that question to. Tess and Brian. Hey, I do got to run though, guys. Go Little League Braves. We got a game getting ready to start in a minute. So I got to get to the field. We hope the kids.
Braves.
Have a great evening. We'll see you guys soon. Thank you.
There you go. All right. Whoops. I just actually kicked the question out. Let me go back. Where'd that one go? All right. SPP says, okay. So, yeah, so this is to the previous question where he was at, or they were asking about private lending funds and taxes. So he said, I need all the income possible in my pocket. I can't afford to contribute to retirement. Well, where's that sticker? Where's that thing? It says, this is not financial advice.
Yeah.
I mean, I guess it depends upon your situation, but once again, this is not financial advice. But from my experience, if I did not have enough cash flow coming in to fund retirement, pay taxes, all that kind of stuff, I would not personally leave my W-2 job until I have that. Because if I need $100,000 coming in to pay all my expenses, have fun, invest for the future, and some disposable income, right? $100,000, that's what I want to have coming in. I wouldn't want 70,000 or 60. I'd want that 100. And that's what I did. So when I did leave my W-2 job, I had enough money saved over here for, like, it was over 12 months, 18 months. I could have paid for everything. And I was paying for retirement, 401k, all that stuff when I left my W-2. So that was something I did correctly. But yeah, so once again, not financial advice, any of that kind of stuff.
Yeah.
Let's see here. All right, Dan Sims. Okay, so here's the second part of that. So at the end of the current year anniversary, I was notified that the company used the step up of a 5% guarantee. Okay, so is there a question to that? Trying to think, Dan, okay, here we go. The first years it yielded more than a 5% return, so the guaranteed it did not need to be executed. Yeah, so that's the nice thing about the structure of annuity. Depends on how it's structured, of course, and what company and all that. But you have that guaranteed return inside there that's going to provide that for however long that thing is there for. So, but yeah, that's why I love the annuities, because they provide that guaranteed cash flow, and they can also have some of the same other benefits that we talk about with infinite banking, for sure. All right. Okay, trying to think of any questions here. All right, so SPB says more questions here. Awesome. So I got questions for today's folks. Start an accelerator in May. Very cool. So the accelerator, by the way, is part of the program, the coaching program with the Private Money Club, which is for private lending. And there's a coaching program inside there if people want to join that. So he's asking here, they're asking, would you lend to someone doing a flip on a house with a well or septic if they haven't gotten them inspected? Inspections are money.
I think the one thing to say here is you have to define what your rules are and stick to your rules, because what I might do to lend is going to be different than what you're doing. And if you're writing this question, it makes me feel like you might not be comfortable with that. So maybe this isn't your deal, because you have to know, like, and understand it. And if you're not comfortable with it, maybe that is your answer, because you have to make the rules and then stick to the rules that you create for your lending profile. And I love the accelerated program. Prior to being with this crew. I had no experience with real estate, and I love it so much. The joke is I took it 16 times. Now, really, it was only 2, maybe 3, but it's a great program to be in. But I think what'll be important is, and Noah talks about it, what are your rules in order to be a lender? What do you want? If you're lending, you have the gold paper, so you get to decide what the rules are.
Yeah. Mr. Sipple.
Yes, sir.
Have you done anything with private lending and septics and all that?
No, I mean, I like what Tessa said about having your rules. I don't feel the confidence and the certainty in the question. Like if I'm reading energy into the question. So like if this is your deal and you want somebody to lend you money to do a flip when you don't want to spend the money on an inspection, I would be a little hesitant to lend to somebody that was in that scenario. I mean, just reading into that, right? Like, because what's your track record? What have you done? Those things. But no, Brian, I haven't done any private lending or anything of that nature yet, because I still haven't figured out exactly what I know, like, and understand. So
I'll tell a quick little story. My very first lending deal that I did on the platform, I got a call from the borrower, and he said, the house is on fire. And I'm like, oh no, it was the porch. It wasn't a big deal. And the deal finalized on time and I got paid back, but I'm like, my poor heart can't take this. So definitely know, like, and understand.
Yep. So, so I've done private lending, not a lot, but I've done a lot of flips. And so I would not lend on a property until they have a septic inspection. The well, I'm not really going to care too much about as long as it's functional, but the septic, there can be, and it depends upon the county, depends upon the government. All those things can make a big deal on it, because if they're doing a flip, they're going to have the septic inspected at some point when they sell the property. And if they're buying the property without inspecting it, I'd be like, no, I'm not going to lend to you, because a traditional bank, by the way, is going to require a septic inspection to lend on it. So why would you be any different than a traditional bank in that regard? Because that is called risk management. Inspections, by the way, on a septic tank it depends on where you're at. Keep this in mind, $400, because what you do is you have it pumped, they inspect it, and give a report. Pretty simple. So I would definitely do it. And I've had a problem with this. So personal experience. This was at my own personal home, by the way. The septic failed when they did the inspection, and I had to pay them $400 to do I can't remember what it's called, but it's called something flush, and it fixed it right there. Otherwise, it would have been serious money. But yeah, and that was actually selling a house. So definitely have it inspected would be my opinion, having done real estate before, but up to you. Okay. So Dan's question about the dividend or the annuity and the 5%. So when you have it's called a step up, is what they call that. It just means that it's going to affect your income down the road. It's going to bump it up. So at the end of the anniversary, they're going to use a step up of 5%. It's a 5% of your income, as I remember. So if it's $100,000, the 5% step up is be $105,000 now. So the 5% is not your return. Your guaranteed is what it is. If it's a step up of 5%, that's how they calculate it. So it's just on whatever the income is at that point in time. It bumps it up. And so it's a good option because, well, actually, Tess, do you know why you'd want to have a step up in there?
If a guaranteed step up, wouldn't that be to guarantee that you're going to get a certain amount?
It increases the guaranteed return you're getting. So it goes from 100,000 per year to 105 if it's a 5% step up. It's for a lot of it's for inflation.
Yeah.
So it offsets inflation. So because if it's a 5 or 10 year step up, well, in 5 years your dollar is not going to be worth $1 anymore. It's going to be worth like 90 cents or 95 cents. So you have that step up there to adjust for that. But, and when you fill out the form, they typically will say that in there, but I'm not sure.
Yeah, because I just looked this up. A 5% guaranteed step up on an annuity usually refers to a guaranteed growth rate applied to an income benefit base, not necessarily your actual cash value. This is very common with income riders on fixed or indexed annuities.
Correct. Yep. And you set that up at the start of it usually. It's not something you can typically add after that. Then he's saying, are they just guaranteeing a 5% bump? Yeah. Yep. Pretty much. Good question though.
Yeah.
All right. Kristen is asking a good question here. Should I pay off all debt, credit cards, cars, etc., first before starting a policy? Ooh, this is a good one, Jason. I know that you have a good story on this one.
Well, I think it depends, Brian, right? It depends on what you're doing. Like, do you, and I don't know what story you're referring to. So now I'm curious and my brain's thinking about multiple things.
Yeah.
But the first thing I'm thinking about here for you is when you pay more than the debt. Like my personal story is I was paying over on 4 of our 10 debts every month, somewhere between $1,000 and $2,500 a month. And when I looked at it, like when I actually wrote it down and kind of realized what I was doing, all I was doing was trying to get out of debt for the third time in my adult life. And when I looked at the sheet, I'm like, wait a minute, I'm paying $1,000 to $2,500 per month extra to 4 different debts. And they're not getting any smaller, really. Like they are, but they're not. Like I don't feel like I'm making any progress. But when I asked myself, will I ever make money on that money again? I thought, wait a minute, no, I won't. I will not make money on that money again. So how could I? And so then I stopped overpaying everything. I started saving that money. I started a policy. I recapture those debts by running it through the policy first. So depending if you're paying over, if you have cash flow above and beyond, then you can run it into the policy. You can use it to pay off the debt. You'll save a bunch of interest and time and build a guaranteed policy. Or if you don't have any cash flow above and beyond, like you're not paying extra, then maybe you need to free up some of that before you start a policy. So, Brian, what story was I going to tell?
They get into debt using the policy to recycle the money through it.
Okay, just check it, man.
Yeah. Because I did the opposite. And this is the lessons learned. This is why we share this stuff, because we all have experiences in life. So I was in a financially challenged situation. This is many years ago. So we ended up selling a house, had quite a bit of equity. Now, is there another option I could have done other than selling the house? Maybe, but I probably could not have qualified for like a HELOC at that point in time. Maybe, probably not. But I just sold the house. And then I went and paid off over $80,000 of debt in one fell swoop. I had no longer $80,000 in my hands. I didn't control it, and it had no future value for me. Yes, I paid off the debts, but once again, I wasn't building any wealth. In hindsight, what I would have done is ran that money through a policy. If I didn't have that education I have now, or the knowledge that I have now, but I could have run some of it through a policy, recaptured more of that, and it had future wealth down the road.
Yeah, overall, Brian, it brought back about $114,000 at least to our family that we're now earning money on for the rest of our lives, and it's going to be a multiple of that. There's over 2 million, like between the 2 policies we use to pay off the debt. Between Patty and I, there's like $5 million of death benefit on our bodies. So you take 114 grand and you turn it into 5 million in the future or more. That's a much better trade, right? The outcome's better. So
win.
Yeah.
Yeah. And also we're not going to say that, oh no, you absolutely do infinite banking before credit cards. Because one, that is financial advice, which we don't give. But what we do is want to make sure that you know the options so that you can make the best choice. Here's the thing I always say. If you have 1 door, it's a yes or no whether you go through it. If you've got 5 doors, you get to make a choice and have more than one choice. So that's, our Vault software can run different scenarios. It depends upon what other resources you have available. There might be other ways to make a better choice. But once again, that's why we'll put our link in here in just a moment to schedule a call with one of us, and we can go through your scenario and see what options are available.
And the calls are no obligation. They're no charge. So like Brian
You
was
don't
saying,
charge?
No charge. No.
What? I charge. Man,
You charge? Don't book with Jason. He's going to charge you.
Heck yeah. You got to value your time, Tess. Like you got to tell me something nice at least.
But then the whole thing is you get to make that choice. Like you said, it either works or it doesn't work. And he's fibbing with you. The strategy calls are free. He's messing with you. Don't listen to him.
Yep. All right. See here. This is a good question here. So Monica's saying, I'm just learning about BYOB, be your own banker, not bring your own beer. I'm very intrigued. My husband and I are over 60 years old and have retirement funds we will be drawing from soon. do you advise opening a policy with retirement funds? It's a very good question.
Yeah.
It depends.
Depends. Yeah, that's what I was gonna say. It depends. And again, I think it's always worth a call. You can put the information together because there's a lot of missing information here. Is there any debt with the family? What are you trying to do? What is your income? You know, there's so many things that we could talk about if you met with a mentor, and we could help you to have the information so that you can make the right choice for you.
Yeah. I mean, funds are funds. Doesn't really, I mean, if they're coming from a W-2 job, from a rental property or retirement, it's just income. You know, and as you know, we all just said, it's like, what are you trying to have the policy accomplish for you? You know, that's a good question. I mean, I had a client that had retirement funds. They didn't need them though. They really did not need the 401k funds because they had other assets and all of the stuff. And they're like, well, I don't want myself to pass away, eventually graduate, as we call it, and then have the 401k then be transferred over to their heirs or whoever it was, and tax issues and all this. They said, well, and if the 401k is only $300,000, they're only going to get how much? 300, tax issues aside, of course. Then they said, well, what can we do with this? So they went into a policy. So they funded a policy, and I can't remember if it was on them or on like their spouse or whomever it was. But essentially what they were doing is taking $300,000, coming out every month, funding a couple policies that would then turn the $300,000 into multiple seven figures down the road, tax-free and guaranteed. And so the person looked at this and said, okay, I can either pass on 300 or 2 million. It's kind of a no-brainer, you know? It was kind of cool that they were able to do that. And then it also helped them.
Yeah. And that's what we're looking at. We're looking, can we solve your problem? Does it make sense? And it has to make sense to you too. Because at the end of the day, we really are only changing one thing. It's like, where is your money being stored? Where is your savings being stored? I talked to someone earlier, and they ran a successful chiropractic business, and they had money sitting in a money market. There was money in savings for a Christmas account. There was monies in savings for a vacation account. They had 4 small kids, money in a savings for another account. And I was like, look, like that's not doing anything. It's one pot of money. Bring it all together, store it in one place where you control it. Or maybe you have a couple places because you have multiple insurable interests, right? It's really just looking at your picture and saying, hey, is what you're doing making sense for what your goals are? And could we optimize it?
100%. 100%. Real Tina is asking another question here. What can you recommend me to do to continue educating about BYOB until I'm ready to fund policies? And I just read she just talked to Mike here, I think today or yesterday or recently.
Read page 85 of this book, Tina. That'd be the first thing I'd tell you to do. Just page 85. And then if you get curious, you can read the rest, but start with page 85.
Yep.
One page.
Another book I do recommend is The Case for IBC. So The Case for Infinite Banking Concept by Carlos Lara. That's like I always say that the one that Jason just held up, which is Becoming Your Own Banker, is more like the technical aspect of how to drive a car, right? But like the other one, The Case for IBC, is more almost theoretical, and it's more about the economics behind being your own banker, right? It's the rules of the road, as I call it. So those are 2 great books right there, and I actually want to read the Case for IBC again. I haven't read it for a couple of years now.
Brian, I actually had someone, that was the first book on infinite banking that they'd ever read, and I was blown away.
Oh, wow.
Yeah, that's wild, right? Like, how many people have you talked to that have actually read that book? And it's Carlos Lara, Dr. Murphy, right? And Nelson Nash. So they're all involved in that.
Guess which one was the first book I read?
The Case for IBC?
Nope.
The Storehouse of Wealth.
Mapping Out the Millionaire Mystery.
Yep.
Your Warehouse of Wealth is also, I've heard, is a good one too. I haven't read that one before.
Yeah,
it's a good one. And then of course, Real Tina, just Chris Nagel's YouTube channel. It's going to have some of the most extensive videos and education on infinite banking that exist, just in my experience. So that's a great place to go and just go down the rabbit holes, because there are quite a few.
And stay around the campfire. I haven't missed anything, I think, in about 6 years, very, very few, because even if you think it's repetitive, you pick up something every single time, or you understand it a little differently every single time. 100%. And then you make friends, and you come to events, and you become family.
There you go. All right. And then SBB is asking here, the last one I have for today. What does fractionalizing a note mean? Heard that term recently, participation loan versus fractional loan with multiple beneficiaries. Well, so since you were asking about private lending, fractionalizing a note, maybe someone else has heard that term before, but just from what I would think, it's a loan that has been split. So there's probably multiple owners of the note.
I would think that, or it's a piece of property broken out. You know, like sometimes the land people break out, but I thought the same thing too. The note must be multiple.
But then I'm saying but beneficiaries. So with loans, I don't think about there being beneficiaries.
Right.
That's typically more of someone who's going to receive a benefit when something happens, typically death, by the way.
Right.
But I'm not sure what the participation loan versus fractional. I have to go look it up, but I've done notes where there's more than one owner.
Let's see.
So I've done that before. Participation loan.
Sounds like a fractional real estate or something like that, right? Where you have multiple owners owning one thing because they couldn't afford it, just buying it outright or something like that.
Because there's other ways you can do it too, where let's say you have a property you're trying to raise funds on. You can have a note with person A, a note with person B, a note with person C. Now, sometimes you can't do that because now all of a sudden, who's in first lien position? Who's in second lien position? So you might consolidate that into one note where you have an LLC behind it that has 3 managers or owners to the LLC. And then you have one lender on the property in first lien position. So what's that?
ChatGPT agrees with you. Fractionalizing a loan can mean a few different things depending on the context, but basically it means if you were looking for 10 million, bank A may give 4 million, bank B may give 3, bank C 3. And that's the number one choice. Sometimes it's breaking it into smaller segments, informal use. But yeah, basically breaking it up. Exactly what you said, sir.
There we go. Cool. Good question, though. Especially if you get into private lending, which is what they said. Brian, can you speak to the basic qualifications they are looking for with your bank statement, CMG first lien HELOC? Oh, yeah. So I can't remember what they call it, but it's just income verification is all it is. So I have income as an example, right? But I have not paid federal income taxes because of the pass-through of an LLC. So I've always had income. It's just the tax return doesn't show it as positive because of the business. So what they're doing is they're looking at your personal checking account or income statement. It's removing the business side of it. And it's looking at what is your personal income. So that's all they're verifying right there. So I just said, hey, here's my bank statements. That's really what I did. And they just went through and picked that all out and they were able to identify the income. I was kind of weird. They didn't even ask me what line items in it were income. They could just tell right off the bat. So it worked. It's interesting. It was pretty unique process. Yeah, and SPP says, I think the context was having multiple lenders with first lien. Yeah, there you go. So the Infinite Mag says, infinite banking scammer. Well,
Who is?
I was going to leave that one alone.
I was going to say, who is?
Yeah, what?
Yeah.
Explain that to me.
So by the way, so what happens is inside the thing, when you have these live streams, you'll have bots that put in comments sometimes, and I'm deleting them in the background. But that's what happens sometimes. These bots will come in and make comments.
Yeah. At least that's not as rude as some of them have been.
Yeah. Oh gosh, there's some that get really weird. You can tell sometimes that they're bots because they're saying things that don't make any sense.
Yeah.
I don't know why they do that, but yeah, Real Time says, sweet. Thank you all, loving this. Appreciate that.
Glad you're here too.
Yeah, glad that you're here. I think we're actually out of questions almost. So we only have about 15 more minutes. Yeah, we got through them all. So get those questions in there. Otherwise,
now the story time and everything, guys. We're just going off on tangents just because.
Yeah.
Atlanta.
Oh yeah, there we go. So Shauna, I don't know who she is. It says going to see you in Atlanta next week, Tess. We have everyone who wants to join. So I'll go ahead and put the link in there. So by the way, Private Money Club, Chris's business that does the private lending, has an event in Atlanta here next week. So the link is right there. It's privatemoneyclub.com/money tank. Definitely go ahead and check it out. There are also virtual tickets as well. I believe all the VIP is taken, if I remember correctly. But Money Tank in Atlanta, there it is right there. I'm pulling up the link in the chat.
I'll tell you guys, I have attended every single event since I got around this crew. And I think at last count, it was over 30.
Wow.
But as I love meeting and in the days when I first started going, they weren't our clients. They were my friends because I wasn't on this side of it. I was still a W-2 employee, but I love so much what is happening here that I became a member because I wanted to share what I learned with you. And for those, I don't think I mentioned it in the beginning, insurance has been my life, my entire career. I spent 35 years preparing the statutory financial statements that are filed with the regulatory boards. And when I found out this was legitimate, I thought it's got to be shared more. So I love being on this side. So if you have a chance, come, please. If you're there, introduce yourself to me. I love meeting everybody. It's my goal.
And Michael Jordan, I'm not sure if you had any other questions. So I'm not sure what you want a clarification on. If you have something specific, we'll go ahead and put in the chat.
Shauna's going to share her chair, she said.
There you go.
You can sit with Shauna.
I'll share my chair. You guys come, I'll share. And I'm a VIP, so.
Yeah. And then, Michael, of course, if you, schedule a call with us, we'll help you go through any questions you have. And if you've watched our 90-minute presentation, that does clarify a lot of the infinite banking questions people have. I saw that Brett put this in here. I guess I missed the second part of his thing. What was his
He was
first
answering a question in the chat, but I'm not sure which one.
You can open up an LLC and have your LLC pay you a W-2 income. That will help with getting things like HELOCs. Yeah, so Brent, I actually did that. So when I left my career in construction management, I had an LLC, I had a solo 401k and an entity. And so I was receiving W-2 income from my LLC. It was funding my 401k, paying all that kind of stuff, Social Security taxes, Medicare, etc. In hindsight, I probably wasn't at the level enough where I had to do that yet. But yeah, it can definitely help though with things like a HELOC and getting financing because you're showing an income. Yeah, good comment though. Good point. Oh, look at this. So Anthony's saying every situation is different, but for a senior
looking to buy policies.
He's doing voice to text. He's always doing voice to text. So I get it, Anthony. Yeah. So looking to buy a policy, is there an income debt bills cost ratio? Example, total monthly bills can only exceed 33% of total income, etc. So I mean, there are guidelines. There's underwriting guidelines based upon age and income and things like that. So they're not looking at your bills, that kind of stuff. They're more looking at your gross revenue and just saying based upon your gross revenue, and of course liquidity can come into play. Here's the total amount of monthly premium deposits that you could be approved for.
Yeah, on the max end, Anthony, depending on your age and your income, it's going to be somewhere between 15 and 25%. So it might be 15% with some carriers, 20% or 25%. We work with 4 different mutual companies, so we have different choices for you based on what's going to be the best fit. And then I always say the bottom end of that should be about 10% of what you're earning, just to follow the first law of wealth.
Yeah.
Yeah.
And you got to remember, they're writing a policy for you and there's a big expense to the insurance company. So that's why they're going to take a look at that. They want to make sure you can continue that policy into the future.
I look at it as protection for the partnership, right? They're trying to make sure that you're going into the partnership and you can be successful for your whole life.
Yeah.
And we want that for you.
Yeah. Because I mean, these insurance companies, they want you to be successful. They want you to have the premiums. They want to pay that death benefit. But it's interesting when you talk to the insurance companies, it's a different way of thinking, how they think, because they don't think in the spans of 6 and 12 months. They're looking at 60, 100 years. It's a weird way to think. And so when they look at you, they're looking at your lifespan. It's very interesting how they do that. And they're truly investing in you as well, because you're part of the company once you have a policy, because it is a mutual company owned by the policyholders, essentially. But Tess, I mean, I don't know where I heard this, but I wanted to see if it's correct. Do you know the approximate amount it costs the insurance company to do underwriting on one person policy?
I think it is in the range of about $5,000, but again, that can change because I've been out of the inside walls for about 5 or 6 years. Yep. But no, not 5. Yeah, probably.
Yeah, I mean, it's another reason why I slow things down on the front end and make sure that you can qualify and use our preliminary underwriting and different things like that. But for a couple of reasons. One, for the person we're helping, because I want them to have realistic expectations of what's going to happen as they go through underwriting, and to kind of protect our partnership as being brokers, right? At the end of the day, being mentors, we're brokers. So we are helping the person solve their problems, and we're going with people that have been profitable every year for well over 100 years as our partners. So we want to do a good job all the way across. So,
because if you think about it, you're getting medical exams, you're getting credit reporting, you're getting a drug testing, you've got an employee who's evaluating all of that information. You've got actuarial teams that are putting together numbers to see if you fall into range for your rating. So there's so many pieces. That's the one thing about insurance. There are so many pieces.
Yeah.
I did a lot with property and casualty, and we could actually tell you loss ratios by accident year, by line of business, by state, by region, and by type of catastrophe, severity, frequency, all that kind of stuff.
Wow.
That's how detailed they get.
Yep. And they don't tell you that. They don't tell you those details.
Yeah, you don't want to know that. It's not important to you, but the regulatory boards want to know.
Yeah. And then Anthony's follow-up to this one is, okay, I see. Now, is that for base premium? Does the PUA factor in since it is optional? So it's total premium. So if we submit a policy for $1,000 per month and 70% or 700 is PUAs, they're looking at the total $1,000, including everything built into that premium, because that's really what they're expecting you to put in each month. So that's what you're approving you on. And he says, meaning base premium can only be 20% of gross revenue. No, it's 20% of your total revenue, and the 20% applies to whatever premium we ask for.
Yeah.
So if it's $1,000 and it's all base, it'd be $1,000. If it's $1,000 including PUAs, it's still $1,000. But it's that full amount. But that's a good question, though.
Yeah, really good question.
This is interesting. I like this one here. Just had my first year anniversary with Infinite Banking. So congrats. That's awesome. Love that. I have a policy renewing here in about 5 days, and I'm excited for that. Took the max loan, owed $740 in interest, and earned $618 in PUAs. Not even efficient yet. Best decision to start. Exactly. Yeah. Yeah.
And that's only year one. I mean, a couple of years and it will be efficient.
Yeah. And the interesting thing about what they're referring to is at the anniversary of your policy, you earn dividends, and those come in as PUAs. And so as your policy matures, it gets more efficient over time. So like that'll eventually get better and better. The efficiency improves. It's a weird thing to see. It's why mathematically people have a hard time saying, why in 5 years is it growing by this percentage, which is higher than year 2? It's because it's getting more efficient. Yeah. It's awesome. And to see it in real time is even better.
And that $618 bought more death benefit too.
Mm-hmm. Yeah, exactly. Awesome. And this is understand. Thanks as always. Appreciate that. And I thought I saw another question somewhere in here about something about qualifying for a HELOC, kind of what they qualify you on.
Yeah, they were asking you about CMG, HELOC, and kind of what they're looking at.
Yeah, so they look, obviously income is the one thing they look at first. They make sure you have that, but they're looking at your credit score, your debt to income ratio, your history of credit, by the way, as well. So they look at all that stuff. And then for everybody's information, when it comes to like a first lien HELOC, or what Jason's talking about is an all-in-one, which is what I'm going for. If you don't qualify for a HELOC based upon your debt to income ratio, an all-in-one actually is absorbing or paying off and absorbing some of your debts so that you then do qualify for the debt to income ratio, which a lot of people don't know about that. They say, yeah, I got denied for a HELOC. Was it a second lien? Yes. Okay. Well, a first lien is different than that. So if you have a first lien mortgage and you try to get you get a first lien HELOC, it pays your mortgage off and absorbs some of your other debts, maybe a car loan. So now your debt to income ratio has changed. It's a weird thing and I didn't know about that for a long time. So Jason, where'd you first hear about it?
The first lien, Joe, Mr. HELOC.
Yeah. Mr.
HELOC.
Of course. All right. Tina says, I don't want to be a broker at the moment, Tess. Says, I want to work with you to help others become aware. Should I call my first call guy back or start a new call with the link? No, you already have a mentor assigned to you. So I definitely would just recommend talking to them, get the ball rolling, go through the application, get that experience. And then if there's a way you want to help others with infinite banking, just have a call with your mentor, or if you want someone else on our team, it's up to you.
And if you're saying you want to talk to me about like how, helping others, I'm Tess at chrisnoggle.com. I know it's not up there, but feel free to reach out to me. If you have a mentor, work with your mentor. But I
think she said
I have a group of Michigan people now that have 8 other mentors. I play with everybody nicely.
I think she's talking about the big man, Mike Samet, being her mentor, and he's awesome. Like Mike's
Yeah.
a phenomenal human, and he knows the stuff forward and backwards. So you're in good hands, Tina.
Yep.
Yeah, you're in great hands. And if you're just saying you want a female to talk to, reach out to me because I'm totally fine with that. I'm friends with Jason's clients too. I become friends with everybody.
Yep. Well, awesome. Any other last minute questions? We're almost at the top of the half hour.
I'm ready to go make a steak.
There you go.
It's only 2:30 for me, so I'm not. Yeah.
It's 5:25.
Tomorrow's 24-hour fasting day. I've decided we did one week sugar-free diet with a lot of fasting, and we didn't eat on Thursday. And so Patty and I've been carrying that on. I'm afraid she's gonna disappear on us though if she keeps fasting all day Thursday though. So.
I can't do it now because I'm on a diet right now, a special kind, and I've tried to do that and I can't. I'm consuming enough calories, but it's not enough. So it's interesting.
Bone broth. You can do bone broth, bro. That'll help you.
Yeah.
When you drink coffee, eventually if you drink too much coffee, eventually that starts creating other kinds of problems, right? I did that when I first started fasting a long time ago. So
my current, this is gross carbs, not net, but gross carbs per day right now is average of 24 for me. And so, it changes things real quick. Took about 15 days, and it was all of a sudden like a switch was thrown.
And yes, Dexter's one of our friends too. We make friends with everyone. He's a OG guy, probably way back to the beginning.
Yeah, for sure. And then Anthony, Andrew asked if we're going to ATL. I will wave on my way by. I will be in Savannah. There is a school event for Connor, and we're celebrating Patty's 50th. I thought I was going to be with all of you, but we'll be having just as much fun in Savannah. So
yeah,
and I'll be there.
Yeah, I won't be there. I'm going somewhere this weekend, but I'm also a little ways away from that place.
Let me say hello. I'll be there. Yeah,
there we go. Anthony says, what are the current first lien HELOC rates or estimates? 7 to 8% right now, depending on the ones that we use. Some other banks will give you we'll have a 10% or 11%. I found out someone that has that. It was a different type of a loan though. I found out it wasn't like a true HELOC, but yeah, right now between 7 and 8% is what we're seeing. And then that's an adjustable rate in most cases. If you have a fixed rate, which this other client does, it's not with one of the banks that we recommend. It's a fixed rate. It's going to be higher. So theirs is like 10%, but it can't adjust anywhere. So that's how theirs is working. MRC is saying policy renewal date on day 25 may be paid 10 days late. It actually can. There is a grace period on your premiums, but if you're planning on paying it a little bit late, please call the insurance company, because what's going to happen is they're going to get a notice of it being delayed, and then they're going to call us as well. If we're the agent that set it up, your agency, but yeah, just call them and let them know, or call us up and let us know ahead of time, and they can make sure they note that. First day is the hardest. Yeah. First night. Yeah. Okay. So Angie's going to be there.
Hey.
Amortized carbs are the worst.
I thought that was funny too.
Well, when I started doing this, and it's funny that you said that, because when I first started doing this, I was like, someone says, "Oh, go get this bread, keto bread." I'm like, "Oh, okay, cool." I look at the back of it. I'm like, "Oh, crap," because it says 5 grams net carb, but it's not telling you that it has 20 grams of carb, 14 grams of or 15 grams of fiber, and they're telling you net is 6. I can't do that, so I cannot do that. But yeah, so that bummed me out. A lot of stuff I can't eat right now.
What about that Ezekiel bread?
No, I can't do it. No, it's all very. It's crazy how much carbs are in your food we eat. I mean, I was consuming probably way over 500 per day, way over that, and that was causing some problems that I was not aware of. So now it's about 25. Big change. So, by the way, yes, Jason, I eat a lot of steak. Venison or bison.
Sounds good. Sounds yummy.
What are you having?
A thin ribeye. Cooking a thin ribeye.
Ooh, I think I have some bison ones. I'm going to have to crack one of those now tonight.
There you go.
So, well, I think we just hit the half hour mark, so we are good to go. I appreciate everybody asking these questions. And keep showing up, by the way, just keep showing up. There's always going to be different questions, different mentors on these calls. You're going to hear different takes on the questions as well, which I think is one of the more valuable things that we do here, is you're going to hear from not just one person, but multiple people. And so I always recommend to all of the people I talk to on the phone, show up for this, because you just asked me a great question. I'm going to give you my answer, but Jason's going to have a different answer. So ask the same question here and get those different questions, get different answers. So someone said, what are the resources to continue learning? Well, you're here, you're doing it, which is awesome.
Yeah. Brian, I appreciate you saying it that way too, because I think it's really valuable. Like, we all look at things, we all learn from different people, we all look at things differently, even if we learn from the same person. So to hear like our take, our money journey, like we're sharing our money scars, our money patterns, the things we've done. And it's not all perfect. We're like, when you hear people, when I first started, I don't know about you, both of you. Well, Tess, I do know about you. I'm 100% sure of this, because you're still like this. But when I learned about this, and I thought it was too good to be true, and then I wanted to teach everybody. I thought everybody should be doing this. It's the best thing ever. And the more I've been doing it, I realized, hey, it's just a tool. It's a system. It's a process. It's really, what are you going to make of it? Yeah. Like, will you take action? Will you do the things necessary versus just learning? And a lot of you already started. We had a lot of congratulations today. So keep coming and learning from us. But better than that, do something about it. Have a phone call, act, have a conversation. If you're thinking you want to do this, if you're worried that you can't, we'll ask you questions and make sure you can qualify. If we're unsure, we'll find out. But action is the things that's going to solve what you really want. So,
yep, 100%. Well, appreciate that, everybody. Hope to speak to some of you on a phone call here soon. And with that, we will see you next week.
Take care, all.